following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the option block. We actually have flipped the host seats this afternoon. I am back in the studio in Chicago, and Mark is now the one in a hotel in Florida. So I feel a little bit better. And this is why you're getting my nice, rich, baritone voice coming over my normal microphone setup, and why Mark sounds even tinnier than usual.
Yeah, sorry about that. That was actually my nickname in high school, was Mark Tinny Sebastian. I don't know if you knew that.
Now, hold on. A couple episodes ago, you told us that Greasy Meatball Sandwich was your nickname. Which is it now?
He changed schools a lot, so he had a lot of nicknames.
I guess so. You ran with several crowds.
when you got a nickname like Greasy Meatball Sandwich, you don't want to stay around for too long. You got to keep moving.
Exactly. So.
All right. And we're also joined today, our rotating Options Express seat is joined by our semi-regular Tim Navabi. Tim, how you doing?
Yeah, I'm very good. Thanks for asking. How are you?
Good, very good. We got some interesting stuff coming from Options Express. We will get to that shortly. Don't want to spoil anything now. Keep our listeners on the edge of their seats.
Ooh.
And with that, we will dive right into the trading block.
The trading block.
And today was an interesting day in the broad markets. We saw some initial concerns that the Fed wasn't going to be able to step in to the degree that a lot of people hoped, and that caused a bit of a broad sell-off. We were, for a while there, the S&P was down about 10, the Dow down over 100 points for a while there. And then towards the end of the day, those fears seemed to have eased slightly. We closed the day, the S&P down about 3, and the Dow down about 43 points. So, and the VIX up about 50 cents on the cash. So the concerns, such as they were, seemed to have eased slightly. Is that pretty much what you were watching as well there, Mike and Tim?
Yeah, I mean, it was just like the markets came out. It was early in the morning. I remember we were kind of the 1180 mark, and the SPX was one that we were kind of watching a little bit. And then just as the morning went on, we went down, and we actually got down as far as 1171, and eventually the market came back, and so it's one to where it was definitely an exciting day for the day trader today, that's for sure.
Mm-hmm. If I was a futures trader, I'd be a very happy camper. Yeah, it's interesting. I've been kind of noticing that, since the beginning of the week, last week they just hammered at the money volatility. On top of that, the volatility curve, the smile, also got flattened up. And then kind of starting Tuesday, we started to see a nice uptick in at-the-money volatility, causing, the smile to kind of flatten even more. Then, probably yesterday, and I'm, taking a stab at today, we're actually seeing kind of, again, at-the-money vol up a little bit more. Like we were saying, this kind of decoupling of kind of buying the extreme downside into kind of buying the ats because this stuff is cheap. And, even though vol is in, we're getting this kind of movement. It's kind of a scalper's delight. There was that song from the 70s by the Sugar Hill Gang. This is the we could call ourselves the Options Express gang or the Option Block gang because of the way we like to have a scalper's delight.
I think in our show notes they refer to us as the Option Block panel or the Option Block team, but we could throw in gang there just to mix it up a bit.
Gang. Yeah, well, Tucson actually, he's actually on top of being a former offensive guard. He spent a little time in a little known rap group. I don't know if you knew this back in the 90s.
The Ox Hill Gang. Options Express, the Hill Gang.
Exactly. So, but I don't know. Are you guys kind of seeing the same thing with volatility? What was your kind of view of what was happening with vol today, guys?
Yeah, I was kind of surprised that we didn't see, more of an uptick in some of the near-off months in VIX than we did, and in the cash it seemed to have settled relatively modestly, only up about 50 cents on the day for the cash, and commensurately in some of the near-term months. I thought we'd see a little bit more of a pop out there. We've been talking for a while about how front month in the VIX and some of the near-term stuff has been disproportionately hammered. Mm-hmm. I was expecting, given the broad market activity, that people would be picking up that stuff a little bit more than they did. I mean, it popped a little bit today, but probably not to the extent that a lot of people expected, myself included, especially considering we have, such a big event coming up next week.
Oh, yeah. Well, I was going to say, I have been noticing a little bit. It's happening slowly, but we are seeing a little bit of this roll-off where people are kind of getting rid of some of the back months and buying some of the front month stuff. So I have noticed just ever so slightly that time spreads are starting to line up to kind of more how they looked, in what we would used to call normal times, which would be, the 90s and, 90 to 99 and then, 02 to 07, where, you do have a slightly elevated vol in the back months, but not to the tune of 3 or 4 full percentage points.
I haven't gone back and looked, but I wonder if we go back. I mean, obviously, this level of inflated BIX is a relatively recent phenomenon. We're in kind of a new frame of reference since 2008. It'd be interesting to go back and look at some of the term structure for VIX in some of the recent midterm and presidential elections, and just seeing what the term structure looked like then compared to what we're going into. Because this seems odd to me, going into such a big event with such an odd term structure the way we have it now.
That is weird. I agree with you. It's very weird.
I'm sorry. I was just going to say we also have some pretty big numbers, I think, for Thursday and Friday. PMI, Michigan sentiment, and claims tomorrow. So, I was thinking the same things you guys were thinking too, and I was just wondering if, people are sort of also waiting for that information to come out too before maybe putting on some heavier positions.
That could be. We'll have to have you go contact the extensive Options Express research department and have them put together that statistic for the next show about VIX structure through midterm elections. We want a detailed Excel spreadsheet and PowerPoint by next week. How's that?
Done.
Tim, here's a question. Maybe this is for the option, the Express block, but do you guys have some sort of indicator as to what Options Express customers are actually like, what kind of your big names are, and kind of, do you guys have a kind of heat map within Options Express for seeing, unusual names that maybe pop up, or, one directional flow or anything like that?
For Options Express customers, we do have a measure of just the names that they are trading. We don't have anything specific on, what it is exactly they are trading or how they're trading it. But I also wanted to say that we do have, one moment here, we do have something which may tell us a little bit more about what they're trading specifically. If you don't mind.
I was just thinking to myself as we were having this discussion that, if that, obviously, Tim, you wouldn't be able to use this to your advantage as you're an insider, but that would be a really cool little thing to be able to look at, is kind of this is where the flow is happening within a brokerage house. Don't you think that'd be kind of cool, guys?
Well, yeah, a lot of some firms do that. The spread book at Thinkorswim is somewhat analogous to that, where you can see what people are working right now.
Yeah, the Thinkorswim spread book is, I don't find that to be particularly of any real, excessive value, other than if I'm working an offer, I can see whether somebody's bit better, offered better than me, then I know, okay, well, at least I'm going to have to do this, but that's about it.
I think it's more of a reinforcement tool. If you're working a spread, you're like, okay, I'm getting a fairly decent fill here. I'm getting a fairly decent price. That kind of seems to be the bulk of the way people use it.
Yeah. I just kind of wanted to go back a minute here and say that, we do have, like I mentioned before, something on our site that says, people at Options Express are trading this. And then there's also a little bit of a map that says, people, if they traded this, well, some traded this one too, and they traded that one, and they traded this one. So it is pretty interesting. Most of the times, they all are kind of grouped. I'm just looking at the SPY, and people that traded the SPY also traded the Euro currency futures, which I think is pretty interesting. Dollar index futures. They were also trading Euro currency, BYD and FAS, Microsoft, stuff like that. So we do kind of have that sort of interconnectivity map as far as
that's that's kind of interesting. Like, I like to trade SPY every day. Well, if I'm a SPY trader, because I would kind of know what the other SPY traders were kind of looking at. That would be a real asset to me, actually.
Mm-hmm. Mm-hmm. Yeah, you can call me up someday if you want, and I can walk you through it if you need me to, and stuff like that. But we also have a spread book as well. So you can sort of see, who's offering what, who's bidding what, on what, for how many. So, just wanted to let you know that too.
Okay.
The spread book definitely seems to be the popular addition with all the brokerage firms. Everyone's following your lead there, Tim.
Great. Thank you very much.
All you, Tim. Speaking of, in addition to spread books, I know Mr. T over there, you've been keeping your eye on one of your other favorite commodities. That is coal. Is that because you're thinking maybe you were a bad boy and Christmas won't be that good for you this year?
You took the words from my mouth. I was just thinking I'm going to get a lump of coal this year if I'm lucky. So, no. It's no secret. We're a long-term bullish on commodities. And right now we don't have any positions in KOL right now, which is an ETF that tracks stocks in relation to the coal industry. But that's something that we are looking to get into. We're probably going to wait until after the elections, as well as the Fed announcement the following day before we take any action on it. But that's something that we're looking at as a long-term holding. But what I think is interesting about it right now, just like the rest of the marketplace, volatility on KOL across the board has been coming down. And if you look at a chart of it right now, it's just kind of tinkering around the 40 level. It's the old, I think we were talking about back when the SPX had a triple top going, and all the old-time traders always say that triple tops never hold, and then the marks were saying, well, we're old-time traders, and we got into it, but then that's another story. But right now, it looks as if on a chart that the 40 level is something to where it's trying to break through. I tried back in January. It tried in late March, and then it's kind of tinkering around the 40 level right now. So I think that as we stand today with KOL, it's right at the area with which it opened up back at the beginning of 2008. I think there could be some opportunities there as a short-term trader, perhaps on a non-directional basis. Maybe not necessarily with a straddle, but maybe like an offshoot of a straddle or something along those lines. But like I said, full disclosure, we have no positions in it right now. We're just looking at it for the long term. And as I was looking at it, I just noticed a few things that might be relevant on the short-term trading side of it. I was thinking just with vol lower as it is, I think I would probably go with an out of the money. I would actually be definitely a buyer of premium of this right now. But like I said, that would be something probably going into the election I would do. But like I said, I'm not putting my money where my mouth is on it because we're typically not in the short-term trading side of it. This is just something that kind of came up as I was doing my analysis on it for some longer-term clients.
You know, this is one of those sectors that I really just I don't really follow that often. I know you hear all this talk all the time about clean coal, and it's just interesting to see. I wonder how much impact that back and forth debate on the clean coal, and the fact that scrubbing all of the pollutants out of coal usually takes up almost as much energy as you get out of the coal itself.
Right.
Because I would imagine all that talk is kind of what's been driving coal up a little bit. What do you think is moving coal besides just the general demand from overseas for anything energy related?
Well, I think that has been the definite demand for it. That's for sure. But the other thing is, this is something to where coal. When you think about if you were to ask a trader about commodities, and you just said to them, "What is a commodity?" you would hear them say something along the lines of, "Coal would not be on the top of the list," and it's not. There's no futures that are traded on coal, but there's a lot of talk about it, along with the market driving it up in general. So. With that, I think that the fact that everyone talks about how China wants to industrialize more and buy more and that type of thing, I think that's just another area with which it's doing so. And it's strong in that it held 30 for quite a while, even when throughout the summer months. And I think just the combination of like exactly what you were talking about, someone who doesn't even follow it that much, like you had said, the fact that you hear about it quite a bit in terms of clean coal and that type of thing, I think just the constant talk about it is something that's been driving it up.
With that dirty note of coal, that hint of sulfur in the air, we will move on into the odd block.
The odd block.
And welcome to the Odd Block. This is the segment of the show where we discuss some of the interesting and unusual options activity that's coming across the tape today. Just as a reminder, if you want to read more about any of the unusual activity we're discussing on the show today, you can find it all in great detail on theoptionsinsider.com. Just surf on over and click on the Unusual Activity tab, and you'll see it all laid out there, including a lot of interesting stuff from our friends over at Options Express, who do an unusual activity review every day. You guys do a morning futures roundup. You also do, I think, a midday unusual activity roundup as well. So a lot of good stuff from Joe and the other guys over at the Options Express team, the education team over there. And we're going to start it off today with Ford. I know we went extensively in the engine block last show about Ford, and we're going to talk about them again because they've been lighting up the tape again. Ford had earnings earlier this week where they kind of really blew the doors off it pretty well, but we'll get into that in a minute. But today's options activity on Ford, we saw some I don't know if you'd call it bearish. I mean, it is bearish technically, but it could also be just, closing out some stuff, which is we saw two enormous call blocks going up, 2 blocks of call selling on the No 15 strike. The first block was 32,500 of the No 15s being dumped for 21 cents. And then 20 minutes later, we had 20,000 more being dumped for 20 cents. So you're talking, it was a total, by the end of the day, the total volume on the strike was 63,000 contracts, an enormous amount of call dumping on the No 15 strike. And so with the Ford trading about 14.15, that's, the near upside strike. Overall, we've seen a tenfold increase on the No 15 strike in terms of open interest just over the past 2 weeks. So this is probably a lot of people who had a spec on earnings and are now closing out their positions for the most part. I mean, the stock's up about 15% just in the past few weeks. It's coming up near, it's got a 1-year resistance level over at 1450, so it's pushing up against that. So it looks like a lot of these guys are just closing out, unless it could also be we have some size underlying traders who are putting on covered calls levels too. But I'm willing to bet it's probably more of the people closing out their positions.
Well, this is kind of the classic example of when option traders learn what volatility is.
Why didn't my calls go up when the stock went up?
Yeah, I was having this discussion with Jim Pittman yesterday. He's like, traders come in, they buy calls, stock goes down, they say, okay, I lost because of, going down. Stock goes up and, a ton of time passes. Well, time decay. Then, in a situation like this, when they're right, all right, and they still lose, that is when they really learn about volatility. Yeah, and this is kind of one of those classic, I'm sure these guys actually knew, I would hope if they were trading, 60,000 options on Ford, they had at least nominal understanding of volatility.
Yeah, you'd hope they're a little more sophisticated than the average 5-lot guy. But
yeah, exactly. But this is the classic example, and actually one of the things I'm constantly explaining to newer traders about is that, it is very, very easy to lose and be right at the same time. And that's the power of volatility. And that may be what we see here. Some guys that were, hoping for a bigger move and we're hoping for more of a pop out of earnings, taking some heat even though they were right.
that is probably, if not the number one question, one of the top 5 questions that we've received over the years. Why did I lose money with my calls when the stock rallied? I instantly knew where you were going with that one because we're there every day of the week with that question. It's amazing.
It was interesting. When I was still on the floor, I was kind of going through that discussion, and this guy said to me, "Yeah, I've seen you guys do that to me." And I said to him, No. You did this to yourselves.
No, market makers are a cabal. Don't you know that? We conspire against the little man.
Yeah. No, if everybody in the brother was going to sell after earnings, your options would still be worth more. So it's you can blame this guy who dumped 32,000 and then another 20,000, a penny worth. He is why volatility drops after earnings.
Yeah, it's his fault. Blame him.
So it's not market maker manipulation, huh?
No, it's not. Shockingly, it's not. But it's constantly explaining to people the market makers like you, and you are what we like trading with you guys. It's the really smart paper that wants to do 10,000, wants to buy 10,000 calls. Doesn't want to take, and the broker doesn't want to take any of it. Those are the orders we don't want.
But yeah, Ford, we talked a lot about Ford last time, so I wanted to bring this up. But they really hit it out of the park with their earnings. Third quarter profit up about 68%. And it kind of gets into what we were talking about last time. We were talking about how they seem to be realizing the fact that it's kind of more of the bells and whistles that you're putting in the car these days that's really driving the purchase. Because they said the average price for a Ford was the highest it's ever been. It was up about 10% to $30,600 because of all those amenities they've been adding, like the voice-activated My Touch stuff and the stereo stuff. All those little bells and whistles that they're building into the cars now are really driving up their revenues.
Well, and let's not forget Mike Rowe. I mean, that guy is dreamy and got that good old down-to-earth attitude that makes me want to buy a Ford. He's just he is to Ford what Howie Long was to Radio Shack. And to the nth degree. That's how good Mike Rowe is.
Now, speaking of dirty jobs, he should spend a day on the trading floor.
I'm surprised he hasn't actually.
Dirty jobs, then.
Yeah, he could. He could go on Expiration Friday. That's a dirty job.
Yeah.
Yeah.
No kidding.
Definitely one to keep an eye on. Obviously, you missed your pop now. The vol has come off quite a bit. The nearest at-the-money strangle, like 13, 15 strangles, trading for like 30 cents in November, so not much. If you're looking to buy for Ford, it's pretty cheap. But if you're a premium writer, not exactly the place to be anymore. You missed your chance. All right, and then moving on to the high end of the retail world with Macy's, or I guess the mid to high end. Sebastian's more of the connoisseur of ladies retail than I am, so he could say exactly where Macy's falls on the retail chart, if they're super high end, middle, whatever they might be.
Yeah, they're probably middle of the road. Yeah,
middle of the road. Okay.
They went out of their way to deteriorate their brand when originally Macy's actually owned. When Macy's rolled out the shopping carts for a period of time, things were going really, really poorly. That brand, they they made the mistake of thinking that they should compete on price with Nordstrom's as opposed to service, and so they kind of really, they're a big step down from like a JWN or a Saks or, Neiman Marcus, but obviously a step up on a Target or a JCPenney. So there aren't a lot that would actually probably qualify, maybe a Lord & Taylor probably, that May department stores, although I think they may even merge with May.
This has been the Retail Minute featuring the Greasy Meatball. And for more retail analysis, surf on over to optionpit.com.
Yeah, absolutely.
I believe today you break down JCPenney in great detail, right?
I was actually dealing with Lulu, which is lemon. So, which I'm convinced is going up because my wife walked out of a Lululemon after spending $200 and said, "Well, I'm only wearing Lululemon from now on." I said, "Oh."
I used to trade with a crazy Canadian who was convinced that Lululemon was the stock to own. He was crazy and Canadian, so those are two marks against him right there. But
Yep.
All right, and then moving on to we're talking about Macy's, and Macy's saw some spec activity today, primarily on the Nove 24 to 26 strikes. A lot of buyers coming in on Macy's today. We saw 3,500 of the Nove 24s go up for in the range of about 60 cents, and the prices were varied, but about 60 cents. We saw 5,700 of the Nove 25s going up for around 32 cents, and then 3,200 of the Nove 26s for about 17 cents. All of these were buys. About 70% of these were on the offer, so people were lifting offers here. Not surprisingly, implied vols up about 5% on these strikes, and total average daily volume was about 2 to 3 times what Macy's usually sees on a given day. And the bulk of this seems to be driven by some rumors from our friends over at Fly on the Wall that the private equity guys are sniffing around Macy's again. A lot of people seem to be agreeing with that rumor because they're gobbling up fairly upside calls. I mean, Nove 26s, the stock just closed around $23 today, unchanged. So you got to have some fairly decent movement to get those Nove 26s paying off. Earnings aren't until the 10th. A lot of specs coming to play in Macy's today. What do you guys think about Macy's long-term prospects? Sebastian, sounds like you're not too bullish. What about you guys, Mike and Tim? You guys shopping at Macy's a lot these days?
Not a lot with Macy's, no. In a way that in an economy like this, it's probably not going to be number one on our pick list, so to speak. But no, we don't have any holdings in Macy's. There's really not that don't want to bash the company or anything, but there's nothing that sticks out to us that says this is something that we need to own today.
I don't have any experience with Macy's as far as trading or hearing any customers talk about Macy's or even placing some trades on Macy's. I do have experience though. I was laid off a couple of years ago, and for the summertime I did have a job. I worked there when it was Marshall Field's and actually during the change to Macy's. And I think it's actually run pretty well. I think they're doing a much better job, as Macy's than they were doing as Marshall Field's. And I know that doesn't apply towards every single Macy's, but being from Chicago, that was a really big deal for us. That conversion from Marshall Field's to Macy's.
See, you're the man I should have talked to originally then. You're the Macy's insider. You know all the secrets. You know where all the bodies are buried, which in Chicago is quite literal, actually.
You're right, yeah. I worked there's in the second basement. I was in stock room, and I worked in the second basement. So it was pretty deep down below on State Street that I was hauling stuff around.
You were in the bowels of State Street then. Wow, yeah.
I sure was. Yeah, I met the president of Macy's. Actually, he came down there one time. But again, I think that it's run pretty smooth. I know that people again who used to shop at Marshall Field's, they don't really like it. The stuff is different. But I think they do offer a lot to a lot of people. Of different sort of price ranges. So.
And with that will bring a close to the odd block, and we will roll right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome to the express/spread block. Tim, what do you have on the docket for us today?
Well, a couple things. I wanted to sort of mention again, we talked about it earlier, what are some of the most active stocks traded here at Options Express, and this information is available on our website. The big names that are coming up are, SPY, Netflix, Triple Qs, Apple, RIM, Baidu, GLD, and RUT. So that's what the retail trader is interested most right now. We did talk about Ford, still getting some calls on Ford. People seem to be very bullish on Ford. The other thing that people seem to be doing right now, it seems to be about split, where you have people coming in and calling, placing orders to sell puts in the SPY much lower, in the 90s area, low 100s, and then you have some people calling in and actually buying some of those puts.
Hey, I have a question for you.
Yeah.
PY, I got a question for you. I was reading about C2, which is the new CBOE rollout that's going to be an all-electronic exchange. And I found the article on the Option Insider, which happens to be a great resource of information.
I never heard of that one. Tell me more.
Yeah, I send my students to kind of look for information. My students that are at optionpit.com, they, I'll say, hey, check out the Option Insider if you want to see kind of some interesting things to read about what's kind of like happening within the landscape of the trading environment. And I was actually writing about this last night. I was kind of hypothesizing the fact that they added SPX to the C2, which I was floored by. I don't know, Mark, if you were surprised by that, but
I was stunned by that announcement because that announcement just came out relatively recently that they were adding SPX. I don't think it's in it yet. I think they're planning to add it down the road. I'm not sure if it was in the initial rollout or not. Ed Tilley came out, I think it was in Reuters, and said, yeah, we're going to add the SPX. My jaw pretty much dropped. Having traded in that pit and knowing how powerful and prominent that pit committee is and how resistant they are to anything electronic, the notion that they could somehow convince them to allow this to go up on C2, I'm still in a wait-and-see mode on that. When that actually is up there and printing contracts, then I'll believe it.
It's got to be that whole maker-taker model that they convince these guys that they can make money on. I will. What do you guys think that adding this is kind of, a topic? Maybe this isn't appropriate for the spread block, but do you think that SPX being added as an all-electronic option will scoop into some of the volume of the spiders? What do you think, Tim?
I don't think so. I think people like to trade the spiders versus the SPX because, number one, they always have a difficult time trying to understand the whole settlement process of the SPX. They just don't like, not being able to trade on that Friday. They don't like to have to wait for, the settlement value. And I think for the most part, too, they can find a cheaper way to trade the SPY than they can the SPX. Also, most of them are used to trading, equity options to begin with. So I think they can say, okay, yeah, I am getting involved with the indexes. I can stay with this SPY because it still trades like all the other options that I've traded in the past.
Right. Yeah, I mean, I definitely agree with one and three. You and I, we could do an entire show as to whether 2 is actually correct. I certainly on points 1 and 3. So.
I think it'll actually be, if this actually happens, I think it'll be tremendously additive in the long term. It's kind of the thing, the SIBO resists unlocking some of these proprietary products they have. Like, they resisted seeing the SPY options being multiply listed. They thought that was going to cannibalize the XBX, but that turned out to be one of the best things that ever happened to them because volume on the spider options and then going back correlated in volume with the SPX has just gone through the roof because of it. And so adding a new way for people to get at the SPX and trade it and maybe tighten up some of those markets a little bit and allow people to execute electronically SPX contracts, I think it's just the best thing that could possibly happen to that product.
Yeah, I think I would advise retail customers on something like that to be very cautious of where how their order is being marketed. If I have a non-marketable order that is somewhat close, I'm gonna want to have it sent to a traditional exchange as opposed to a maker-taker exchange. Wouldn't you tend to agree,
Yes.
Mark?
Yeah, I would. Obviously, SIBO is launching this C2 as an attempt to break into that whole maker-taker fracas that is going on in the options world right now. But it is interesting. Yesterday, I was down in New York at a high-frequency conference. The target audience for this new C2 is the New York high-frequency community, particularly the equity guys, and bringing them into the options. In fact, C2 is located in New Jersey. They didn't even house it in Chicago. They wanted it to be closer to those high-frequency guys who are, obsessed with latency. And, talking to these guys yesterday, they were kind of just scratching their heads about C2. They're like, yeah, there's nothing really new or exciting here, and we're not linking into it yet. So I don't know how much. Obviously, it's still very early. The exchange is, just in the earliest phases. So we'll have to wait and see how it does. But so far, it seems to be a giant shrug. But that might change if the SPX really takes off.
Nat, that I've seen a lot of these exchanges have been shrugs, except for they've kind of scalped non-marketable orders that liquidity providers are trying to liquidity providers are trying to collect on both ends. I take a marketable order to SIBO because I get what? Payment for order flow. I take a non-marketable order to C2 because I get what? Payment for order flow. It may drive down like commissions at the cut rate houses even lower. But in the end, I'll be very interested to see what how that works out in terms of net execution. So, did not mean to totally stomp on you, Tim, but I'm really interested in whether you thought that this SPX concept would, whether the adding another exchange of SPX would add, detract, or become a net neutral on SPY. And some of the other derivative products, maybe like an ES or something like that.
Mm-hmm. Yeah, I mean, I think time will tell. As with any kind of new product rollout on a new platform. But like I said, the people who are trading the SPX here, I mean, they really know how to do it. They know what to expect. The people who are trading the SPY, they are trading that also because they know what to expect,
Right.
They know where they can hang out and where they can't.
Right.
So maybe the better question then is, have you seen any customer interest at all in this new C2? Has anyone asked about it? Has anyone asked about maybe electronic SPX or anything along those lines, or is it still hasn't penetrated at all with retail? Oh, interesting.
Yeah.
So it's still an inside baseball argument for the most part.
Yeah. I'm telling you, Mark, that the SIBO must be really worried that they're going to lose their licensing with the S&P 500. That's the only reason why you do this, right?
Well, the ISE just lost that long-standing lawsuit they had against them about trying to multiply list the SPX, and so they seem to be kind of in limbo with how they're going to pursue that. So they seem to be relatively safe for the foreseeable future. That's why I was so surprised to hear that announcement. That I think everyone was kind of surprised to see, wait a minute, I mean, they've resisted this for so long.
I couldn't believe nobody was talking about this. This should have been massive news. You know?
Yeah, you know, we put it up, and that was obviously the takeaway for us. Wow, SPX, electronic, and I didn't see it anywhere else. You know, everywhere else the takeaway was, C2 is launching on end of October or whatever.
If you read Option Pit's blog yesterday, there was a nice discussion on it. So,
well, there we go.
Thank you, Option Insider Radio, for pointing that out to me. So we don't. By the way, we do not. We're not big fans of cross-marketing here at Option Block at all. So.
Yeah, not at all.
Not at all.
All right, Tim, now that we've completely hijacked your Express block with all this insider baseball talk, you have anything else that's lighting up the tape over at Options Express that you're hearing from your customers?
Commodities, of course. And that's easy for me to talk about and get excited about. The commodities are still strong in regards to, cotton. Wheat is still bullish. Many of the agricultural commodities are still, the grains, are still strong. And I just wanted to bring up another ticker, DBA, that's the Deutsche Bank Agricultural Fund. That would be another way to participate in commodities other than futures. And it's more of a basket, it does have coffee there, it has sugar, it has wheat, it even has a couple of the meat products. So, it's just another way to participate.
At the rate we're discussing commodities, we might have to change the name of your segment to the Ag Block or the Commodity Block or something along those lines. Because it just seems like every day for the last couple of weeks, it's just commodities. I mean, we had the exact same discussion about SPX with cotton last show about how cotton needs to be dragged kicking and screaming into the 21st century and get some actual electronic prints out there so your average mom and pop retail can maybe trade a 5-lot of cotton without having to call up Tim and having him put the order to the floor and get a ridiculously wide quote and take 20 minutes round trip. It's funny. It's funny they complain about lack of retail interest in some of these esoteric future products, and yet they don't take the obvious steps to make them palatable to your Options Express customers. Yeah. So next time you guys go chat with the CME, Tim, tell them you want cotton, electronic, and ready to go.
We kind of bought it with VIX. Have you guys seen kind of what is it still kind of 50-50ish buying or selling, or are you seeing buying versus selling, or are you guys seeing, along with kind of the VIX, are you guys seeing an uptick in on the buy side versus the sell side over the last couple of days?
Are we talking about in the commodity area?
No, just across the board at Options Express. Within the equity area. Has there been a noticeable uptick, or is it still pretty 50-50ish?
Nothing noticeable.
Really?
It seems about 50-50ish, and it seems, people, like I said before, they're either, they seem to be prepping themselves. Either they're, taking some money off the table if they were long, and in which case they're, buying some out of the money puts, and then you have some other people, getting long, now by, selling put spreads down below on the SPX or on the SPY.
Yeah, I'm still amazed at that because I always thought of, the Options Express clientele as more of the premium selling segment, the higher end of the retail spectrum who leans towards premium selling. So I'm always amazed to hear that they break down so evenly 50-50.
But also, premium sellers don't last forever. I think you probably experienced that. And, I've seen that, we have some very good premium sellers. We don't talk to them very much, but, they're very good and very successful. And then some of the newer clients like you're discussing, they will try their hand at it a couple times. But, it's one bad one bad move in the wrong direction, and they're, they've got a real bad taste in their mouth about selling premium.
Yeah, I think the worst thing that can happen to a
Why
premium
I'm here.
seller is make money initially.
Yeah. Well, if premium selling wasn't difficult, yet potentially very profitable, I would not have a job. So, that's kind of one of the neat things about it. And, I think it is a great way to trade, but it's really hard. And, that's why I'm here. And for those that, and that's kind of why Know Your Options is there as well, right? So.
Yeah. Death, taxes, and time decay, the three things you can count on in life.
I like that. Taxes and time decay. Remember that.
So, Tim, thanks for that.
Sure.
I'm glad we had a few interesting segues in the old Express block there, but that's kind of the fun. We see where you take us, and then where the discussion leads from there.
Yeah.
So that's going to close out the Express/spread block for this week, and we're going to dive right into Around the Block.
Around the Block.
Welcome to Around the Block. This is the segment of the show where we discuss what's on the horizon for the next few sessions in terms of numbers and earnings and that sort of thing. And this week, it's still a lot of earnings. We got some interesting names coming up. 3M is announcing on Thursday, an interesting one to watch just from a very general manufacturing perspective to see how they fare. We also have Exxon, and a lot of people out there in the audience are watching the oil services sector quite a bit, so it'll be interesting to see how Exxon fares in light of all these recent developments in the oil services. And it's a fun name I saw on the list was Sony. And, we're always talking tech stocks here, and we're talking the big titans of tech, and Sony never comes up in that discussion. And I think, Mark, you were saying before the show when we started taping that it used to be the other way around. Sony was the name that you used to say when, you wanted to buy a TV, you wanted to buy a VCR, or back in your day, the 80s, the Walkman, you went to Sony.
Yeah. The Walkman was the coolest. So.
Funny enough, I think I read the other day that they just made their last Walkman. They just discontinued the Sony cassette Walkman. So apparently, I think it was in Japan they were still selling them. So apparently the Japanese were still using the old cassette Walkman.
Wow, I'm shocked.
There's something cool about walking around with a Walkman. I'm sorry. It looks awesome. You've got that big bulky thing. I really think that without the Walkman, we don't have cell phone belt buckle clips. And, that may be long-term Sony's greatest gift to mankind, the cell phone belt buckle clip.
That is Sony's contribution to society. Forget the nice TVs or the PlayStation. Speaking of PlayStation, actually, that seems to be where Sony kind of went wrong in recent years. They spent $1 bazillion developing this massive monstrosity that no one apparently wanted.
Well, they made it, their price point was way too high. And they missed the boat on the motion action, and they didn't realize that no one was ever going to buy a Blu-ray.
Yeah.
Blu-ray is going to be around about as long as Betamax was. So.
And that's one of the things that drives me crazy about Sony, actually, is their just adherence to proprietary formats. You buy anything Sony, you have to buy a stupid memory stick. You can't use an SD card. If you want to buy a Sony player, you have to buy Blu-ray. It's, they stick to these things that they try to lock you down in, and that seems to be one of their main problems. That seems to be driving consumers away. People have SD cards. They want to use it on all their cameras,
Mm-hmm.
Interesting to see. I don't want to turn this into the Sony block, even though we probably could. There's a lot of going on at that company that is just, they're just such a weird one. They make everything now these days. It's almost hard to pigeonhole them into one thing anymore.
Well, they've turned into like a GE almost, in a lot of ways, right?
Yeah, they kind of. Yeah, they're
finance arm.
The Japan's answer to GE. So Tusaw, what are you looking at this week?
I'm still basically, the election is the big thing. I mean, tomorrow we have the initial claims, we have continuing claims, but quite frankly, I think we're going to be. I think it's just the election is what it's all about. The election and then the Fed announcement the day after. So I think that what we have is going to pale in comparison to what that is, maybe. So. And I'll give you my 50% guarantee of the market going up or down.
I love it. I still think Microsoft is we talked about this on Monday. Microsoft's coming up. Just a ton of stuff next week. I think people are expecting a lot of at-the-money movement. That's why we're seeing a little more at-the-money volatility. We're probably seeing some people spread that off by selling the expensive stuff, which is the puts. So, it's really, I'll be really interested to see kind of what's happening next week. We're going to have kind of a real neat kind of, it'll be a fun week preview show next Monday, I think. Let's just put it that way.
Yes, sir.
And with that note of humor, we will close out this episode of the Option Block. Thank you guys for coming in. Tim had to run, but you can obviously find Options Express at optionsexpress.com. Pretty easy to find. Or if you have some specific questions, call up there and ask for Tim and tell him Mark sent you, and he'll take care of you personally. If you want to find out more about what Mike Tusaw is doing in the coal markets, then surf on over to knowyouroptionsinc.com. It's a little dirty over there, but once you get past the coal dust, it's a fun place to go hang out. Of course, Sebastian going on about electronic SPX over at optionpit.com. We have all that unusual activity stuff that we discussed, as well as a lot of the breaking news stuff from the options market over at theoptionsinsider.com. I want to thank everyone for listening, and we'll see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.